Hi, my name is Drew Hefflefinger, Financial Advisor at Acorn Financial. Today we're talking about market volatility. It's back. So in January we saw markets go on a positive run, and here in February we've seen markets pull back. And right now for the year we're sitting at about even. And one thing I want to share today is that this is not uncommon and market volatility is completely normal. And what I want to do today is share some information through a chart. So let's bring that up. The chart we're looking at right here is a year-by-year box and whisker chart. And what it does is it shares the intra-year high, intra-year low, and then year-end performance from 1979 through 2017. So what we can see is the whiskers of this chart share the intra-year highs and lows. Those highs and lows can happen at any time. It could happen in April, it could happen in June, it could happen in September. And then the solid bar shares the year-end performance. So how did the market do on December 31st of that given year? And what we can see is that the market actually has quite a bit of variability when compared to its year-end performance. In 2009, we can see the extremes, where the market was down almost 30% in 2009. It was up as high as 70% and ended the year around up 30%. And we can see this over time, that variability does exist. It is completely normal. Another thing to note here is that markets are generally positive over time. If we sat here and we counted each of these solid bars, the year-end performance, about 70% of the time they are going to be positive. So unless you were Christian Bale or Steve Carell's character in The Big Short, 2008 was not a fun year for anyone. I mean, it was literally painful. But things to note here is that it has been seen before. During the Great Depression, in the 1987, we have seen large downturns. In 2001, we have seen big downturns in the market. So what happened in 2008, 2009 was not abnormal. It just doesn't occur often. And the critical piece here is that of those who did stick around through 2008, 2009, enjoyed 9 years of positive returns and counting. I think it's important to note that the long-term investor typically and almost always gets rewarded. At the top of the market in 2017, the housing market was firing on way too many cylinders. The S&P 500 index, an index of the 500 biggest publicly traded companies in the United States, that index was at 1,500 in October of 2007. As I sit here today and record this video, the S&P 500 is at 2,700. So a significant increase, and that includes the downturn in 2008 and 2009. Remember, those who stick through the volatility tend to be rewarded. So let us know what you want to learn about next. We really appreciate your attention, and thank you for watching.